And good morning, everybody. This is John. Welcome to the free video. It is about 2 minutes after the open. I just want to look at GoDaddy here. So GoDaddy closed at $26.56. I think that's a Freudian slip. And it closed, and now this morning it's down about 3 cents. Right? It's kind of fluctuating. It's massively unchanged, is what GoDaddy is. Now it's massively up 6 cents. Well, so we had an earnings play on this, okay? And on the earnings play, we sold calls. And now, so the question is like, well, John, the stock's up 17 cents now, so is this trade not working? So I just wanted to show you this as an example of implied volatility collapse. So if you remember, prior to earnings, implied volatility was, I think, 112%. And at the open, it immediately got cut in half down to 66%, okay? And then this will continue to fall until it gets more in line, which is, it's more normally about 40%, give or take, right? So what happens with this, and this is a great example of implied volatility crush, is that the stock essentially opened at the same price as it closed yesterday, okay? But the options, the $27 calls that we sold, are cut by 2/3 or whatever that is, give or take. And that's just kind of the immediacy of implied volatility crush, which I just thought that was kind of cool. So on this trade, now the question becomes, because we sold the $27 call, right? If we close at $27, then we're going to additionally make, the additional money here, right? That could go into our pocket. But the question is, what's the trade now? Okay, the first trade was the guarantee, the essential guarantee that implied volatility is going to collapse. Okay, it has. That was kind of the easy trade. Now we're in more of a directional trade, okay, where we really don't know what's going to happen next. Like, we have no idea what's going to happen next. Well, let's look at a chart here. The daily chart's not going to help us too much. Let's look at this 39-minute chart. Now, we can look at this chart and say, okay, there's an uptrend, there's choppiness, but there is no way from this point right here that I can say confidently, yes, this stock is going higher, or yes, this stock is going lower. Generally, if we're looking at this from a chart perspective, there's more of an uptrend. Okay, the moving averages are stacked on top of each other, and all the waves are below zero. Okay, so I would say there's probably a little bit of an edge that it's going to go higher. So if that just kind of brings us full circle back to our position and the intention of our trade. And the intention of our trade was to capture the implied volatility collapse. And at this point, there's really no upside to holding on to this trade any longer. In other words, we take the money and we run for the hills, okay? So anyway, hopefully that makes sense. You can see the implied volatility here has dropped a little bit. We've made a little bit more money on that. The stock has dropped a little bit. But remember, if the stock, there you go. So now look at this. I was going to say, just think if the stock were to suddenly rally like a bat out of hell and go up 50 cents, is that something we'd want to be worried about? The answer is yes. Look, now I'm losing money, right? So the moral of the story is that, just be clear why you're getting into a trade, and then once the reason for that trade is over, really question why you'd want to hang on to it. And this is a good example right here. I mean, typically on something like this, you just kind of get out at the open and you move on to the next trade. And here you can see it's like, oh my God, now I'm losing money. Okay. Anyway, so nothing to fret about. And let's get out in a gentle yet affirmative manner. And I'm going to get out of this short call. And then the long call, you always hear, the idea here, you've heard me say that you don't need to, this long call, it's only 2 cents. So you don't need to do anything with that. I mean, it's 2 cents, right? If you sell it, not only are you not going to really make much money on it, you're going to incur commission costs. There's a chance here, however slight, that GoDaddy could explode higher and go through $30. Well, that's fine. That's a no-risk trade. You can see that the amount of margin that this is only taking up is $2.50. Okay, so now looking at this trade, is there anything I'd have done different? Well, yeah, I wouldn't have recorded this video. I would have just gotten out of the trade right away. But that's just it's actually a good live example of the idea that you don't ever know exactly what's going to happen next. In this particular trade, we knew that the implied volatility was going to collapse. In a perfect world, GoDaddy would have sold off and been down $3 or $4, and then our options would have been worthless. In this case, the stock opened up flat, but our options still fell in value. The options that we sold still fell in value by like 2/3, even though the stock didn't do anything. That's great. That's money in our pocket. In this case, I dawdled a little bit as I was doing this video, and it started going against me. Okay, and that's just real life. That's just real trading. I'm not mad at the market. I'm not going to do a revenge trade or anything like that. And time to move on to the next trade. Okay, hopefully that was all helpful. So one of the most important things in terms of being able to manage risk is just understanding how to do stuff like that, like I just showed you. That's a ballpark way to do it, but there's more specific ways to do it. And there's also specific ways to set up your trade so you're not really caught. And, caught when the market turns, so to speak. And what I found is the best person, the person who manages risk the best of anyone I've seen is Don Kaufman. And that's where I've learned some of my strategies from in terms of like cutting back on a little bit on the risk in terms of trading. He's going to be doing a class this upcoming Saturday this is a $497 class, simpleroptions.com/sell premium. And this is essentially, and I love the description. I mean, there's a whole description above here that you can read, but it's the idea of how to be a grandmaster of the Greeks and position management so you can see 5 moves ahead and make adjustments on the fly. And that sums up a lot of the course right there. And I mean, I'll be attending the course as an attendee just to see how he does that. And then he's going to have 3 days of live trading where he's doing adjustments and things like that full time and building up positions. And that's where you really learn this stuff. And if you want to take your trading to the next level and understand the Greeks and all that position management and adjustments and position sizing and things like that, this is the course to do. So that'll be $997. That includes the Saturday class. All right. Anyway, hopefully you guys find that helpful. I know a lot of people have signed up for it already and they're excited for it. And essentially we're going to be unleashing Don on to the trading populace at large, so he can just kind of tell them how it really works. All right, you guys have a good rest of the day, and we'll see you at the next update.